Hey, welcome to Options Brew TV Market Shot with Mark Phillips of Harvested Financial. Mark, welcome.
Lex, good to see you. Happy Thursday.
Thank you. Happy Thursday. I'm so excited about this one. I remember to hit play, so we're good there. We were talking pre-show. You've got a good one. I think this is something, again, that you don't see a lot of on the internet. This is stuff that's kind of hidden in the dark annals of professional trading, I'd say.
Fun little spread. I think I got pulled up for you all.
Yeah, this is going to be tricky. I'm like, I can't wait. Let's go, man. Do it.
There's some arithmetic. We're going to have to pull out our calculators. We're going to maybe your spreadsheet.
Hold on. Look what I got. Got my orange calculator.
Oh, that's the only way.
Okay, here, we're going to need it today. I have it right in front of me next to the mic. So here we go.
You need the big buttons because you're in a rush. You don't need all the extra fancy functions. You just need big buttons you can hit.
That's right.
So what I want to talk about today are two of the big cannabis names that everyone's been talking about. And that is TLRY, TLRY,
okay.
and APHA, APHA. And so these names have been going bonkers since the beginning of the year.
Right.
Before today, TLRY was up 646% on the year.
Wow.
And we're February 11th.
Jeez.
So, stock was trading up over 60 earlier this morning, but a big flushing today, down 40%, as of right now. So
yeah,
coming a little bit down to earth, but still some pretty significant gains in this name.
Right. Right. Okay. So how do you it's APHA, and what's the company? APHA?
APHA, yes.
Okay, got it. Terrific.
And so they agreed to enter into a merger in December, I believe.
Mm-hmm.
And so, two of these big companies, TLRY's got great distribution. I believe that's one of their sort of strong suits. And the two of them were going to combine and, become one of the larger cannabis companies that was out there. So I don't know exactly when the deal's struck to close, but the terms of the deal suggest that for every share of APHA, a holder of one share of APHA will get 0.8381 shares of TLRY.
Okay, so this is going to be, this is a merger? Is that?
This is a merger. This is agreed upon. I don't believe they have a set date for it yet, but these were the terms of the deal that, the CEOs agreed upon.
Okay, and for folks that don't understand that, so this isn't one company necessarily writing a check for the other. They're going to take the two stocks and blend them into one. And whatever you're holding is this ratio that you just talked about. We'll get into it in a sec, but is that correct?
Exactly. So TLRY is going to give shares of its company to the APHA holders at this predetermined ratio.
Got it. And what company will survive? Will it be a different name, or will it be TLRY?
I believe it will be TLRY.
Okay, perfect. Good. Okay, understood. Let's see how this works.
Right. So we have this ratio of 0.8381 between the two companies.
Yep.
And so APHA right now is trading around 1883.
Yep.
And we have TLRY trading around 3874.
3874. Okay, I'm writing these down.
So if you believe, so that 0.8381 is pretty close to 1-to-1.
Sure.
And you can just tell just by that something's off a little bit with these numbers.
Sure.
But to highlight even just how far off these two names are trading from the terms of this deal, we can think about it in two ways. We can think about what is the value of TLRY priced according to the APHA stock price.
Right.
Or we can think about the price of APHA relative to how TLRY is priced right now.
Exactly. Okay. And you're going to get the same disparity no matter which way you take it, right?
Exactly. Either one of them's too cheap or one of them's too dear.
There you go. Okay.
And so if we take the TLRY price at 3874,
yep,
at that 0.8381 ratio, APHA should be worth $32.47 a share.
Okay, so it's for the viewers, it's the price of TLRY times 0.8381, which equals roughly 32.46 thereabouts, give or take pennies, right?
Bingo.
So what Mark is saying is this APHA stock is way too low at $18.78. It should be, based on the deal, what did I say, 32.46 ish.
Exactly. If
We're
this
way off.
all the paperwork gets done, everything gets signed, shares are about to be transferred, APHA
So
shareholders are going to get paper that is worth $32.
right. So here, let me ask a question. I don't expect you to necessarily know the answer to this either, and I'm not sure I do. Why is this discrepancy so great? Is this deal might not happen discrepancy? Meaning, there's a risk premium of both sides walking away and they go about their merry way. Is that what this is telling us, or is there something else going on that we're not hammering here?
That's typically the way I would think of a merger arb deal. That like the difference between where something's trading compared to where the final deal price is represents some
Yep.
probability of that deal happening. There are interest factors, of course, like even if there's 100% certainty, it might not trade exactly at the deal price.
Right.
Sometimes it trades over the deal price. We've seen that happen a
Sure.
number of times.
Yep.
Where maybe they're expecting another suitor to come in and, potentially raise the price.
Got it.
So, but yeah, usually when it's trading below, I interpret that as a probability or a lower probability
Sure.
of the deal actually happening.
Right. And then, I think you're going to show us a couple spreads, but if you're just trading the stock ARB and you buy APHA, and actually you could even sell, if you could borrow it, you could sell TLRY, those two prices could merge, in which case, one has to go down or one has to go up. Right.
Exactly.
And if you do that ARB, and it goes through, technically you're going to make some money. Now that's risky. I'm not saying that's the strategy, but I know you have a better way with options.
Oh, of course, there's a better way with options.
All right.
But
Have
I
at
think
it.
that one of the reasons why it's difficult to do it with stock is that it's hard to get a borrow.
That's
that
right.
like you'd have to be able to sell the TLRY shares short to really profit from that. And there's going to be some demand out there for those shares. We're certainly not the only people that have identified this discrepancy.
Right. Okay, good.
Just to sort of complete our arithmetic, if we think about it the other way, so we talked about what APHA should be worth if we believe TLRY's valuation.
Yep.
We can think about that as what TLRY should be worth if we believe APHA's valuation.
Mm-hmm.
And so flipping that on the head, we take APHA at $18.81 or $18.83, divide that by 0.8381,
Correct.
and we get $22.47.
That's right. So, and obviously TLRY is trading about $16-ish too high relative to that calculation.
Exactly.
Good.
So
okay, there's got to be something for us to do safely.
oh yeah, let's look at some options. Let me pull up my trade hawk.
Okay.
So I've got TLRY up here. And I'm going to go out to March. We'll just take, a month out option.
Okay.
But one thing I want to highlight here before we even get into the spreads is just how volatile this name is. So we're looking at in TLRY here, an at the money vol of around 263.
Jeez.
So whopper expected moves here. And what that's going to do is that it's going to cause our spread, the two legs of our spread, to look very similar. Because in a very high vol environment, the options are going to look increasingly alike. That when we have a lot of volatility, the stock could potentially move around a lot. The difference between, say, I want to get long the 35 put in March and maybe sell the 25 put, go for a $10 vertical. A $10 vertical out of the money here is going to cost me around $650. So it's an expensive vertical,
Right.
Given how high the volatility is here overall.
Sure.
But going a little out of the money, a couple of dollars down, buying the 35 to sell the 25.
Got it.
How did I pick that? Well, I used a little bit of the sort of pricing there in terms of, if this were to go to the APHA price of that $22, I want to, I'll pick a spread that, seeks to capitalize most on that, a little out of the money, maybe pushing past 25 is where we have our sort of max profit here. So that's sort of the logic that goes into picking this $10 vertical here. But that's an expensive vertical. High volatility, you're getting long, you're long options because you're long the closer to the money option here. It's going to be expensive. This is even as a debit play.
Okay. Got it.
So we're going to be long a put spread in TLRY.
Okay.
But the other way that this could play out is that APHA could pop. APHA could come up to the price of TLRY. And so
we're going to go into the same month.
Yes, we are going to pick
March
also. Thank you. And I'm going to go again a little bit out of the money.
Okay.
And thinking about what APHA should be worth in terms of TLRY's price at that $38 price.
Yep.
So we were looking at like a $32 price.
Yep, got it.
So I'm going to go with the 2030 vertical, just to keep that $10 vertical in both places. And with that target max price or the max gain on the spread being just below where we think APHA should be worth in Tilray terms. So another $10 vertical. Notice this one's significantly cheaper.
Yep.
This one's only going to cost you around $1.70 right now.
Okay.
And a little bit of that's a function of the stock price overall. Both of these do have very high elevated vols. So, we're looking at, I think it was 260 in Tilray. This is quote unquote only 215 vol. But overall, the spread's going to be a little cheaper, mostly a function of that stock price overall. But we're going to pay about $1.60, call it here, with some good mid-market execution to, max possible value of the spread being $10. You stand to make about $8.40 on this spread.
Got it. Good. Looks good. So the combination of these two together is around, what did you say the other one was? So about $8.50 thereabouts. I can't remember the other one now. $8.
Yes, it's
$8.20. Yeah, $8.20.
Yeah, a little less than $8.50, I think.
Yep. Okay.
And so, I think we could see one of these hit. We could see both of them, increase in value, right? Like we don't necessarily know which one is going to go up and which one is going to go down. They could both go up, but I think what we're playing is the convergence here,
right?
Overall, and that's sort of where that merger arb comes in.
Or you could have a combination of both, right? This stock could go up, the other one could go down. You win on, you kind of make it on both, right?
100%.
So, and the risk is what we pay for this thing. Obviously, that risk can be, would be realized at expiration if all things don't work out, right?
Right. With both these debit spreads, the most you can lose is the amount that you pay for it.
Yep. Cool. Wow, that's cool. Wow. I love it.
So yeah, definitely some interesting merger arb opportunities out there. And the options really let you take advantage of that. Although the high vol does make these expensive spreads.
Right.
So that is something to be wary of here in this really elevated vol environment.
Yeah, I mean, maybe I stopped your share. Sorry. So yeah, maybe, I mean, and there's other ways you can do this too, right? You could use put spreads and do credit spreads if you decided that was your path. There's alternative ways to do that. Maybe we'll talk about that in a different episode. But
that's a great call.
Yeah, let's put this in the memory bank. Let's review this. Let's come back to this on a subsequent episode. I'm really eager to see how this plays out. This is a good one.
Okay, great. Yeah, I will. We'll throw this in the tracker.
Put it on the tracker. Good. Okay, Mark. Anything else for today? Are we good?
No, this is the play for today.